We're here at PDAC 2016. It's day one, and I'm being joined by the CEO and founding member of Silver Wheaton, the largest precious metal streaming company in the world, Randy Smallwood.
Thank you, Andrew. Glad to be here.
Randy, we've had a spectacular start to the year. 2016, we've seen silver up 12%. Silver Wheaton's following suit up 28%. Many people are saying this is the start of a new bull market. What is your take on that?
Well, I think we're finally starting to see. I've been calling for it for a while. We're starting to see some weakness in the U.S. dollar. I've believed that it's been much too strong as a fiat currency around the world, and so we're starting to see that weakness, and that combined with a flight to sort of safe haven is pushing precious metals. Of course, we've got good gold exposure and good silver exposure. We're about 60% silver, 40% gold, and both gold and silver are moving nicely, and of course, so is our stock.
2015, we saw silver production approximately 44.5 million ounces of silver equivalent from Silver Wheaton. You're planning to grow that in 2019 to about 55 million ounces. Where is this production growth primarily going to be coming from?
Well, and our guidance was 44.5 million. We haven't actually released our final results, but we had a good year. So stay tuned. I think we release our final results in about a week and a half, 2 weeks now. Where's the growth coming from? Salobo reaching its full level of production. It's one of the best copper gold assets in the world, and it's just about the second phase of expansion there is just about completed. Should be running at full production through the course of this year. Constancia, of course, Hudbay's operation down in Peru has just reached full production levels this year. We're going to see continued growth there, and then even San Dimas, Primero. So all of our core assets, even in these low commodity prices, our partners are investing into them, and we're seeing growth. And that's what happens when you invest into high quality assets. They're the first ones, sometimes they're the only ones that get invested into.
Your production growth is certainly impressive, but what I find even more impressive are the margins on your business. Your average cost of production for silver is $4 per ounce and $400 per ounce for gold. With such an attractive business model like this and such attractive margins, why aren't we seeing more people entering the streaming business?
Well, it is an attractive model. We started it 12 years ago. We were the ones that came up with this business model. It has been copied. The traditional royalty companies have shifted over, and I would call them streaming companies now. The bulk of their value is in streams, not royalties now. So there's no doubt it has been copied. I'm sure it will be copied out there. The advantage we've got is first mover and critical mass, and what we focus on is taking any of the cash flow that we generate, any of the profits we generate, we put that back into the ground. We invest that back in to the ground and continue growing our company by growing the resources that are the foundation of our company going forward. Having that critical mass, having that cash flow just gives us such an advantage. This year we should probably do in excess of $500 million in cash flow, depending what the price of silver and gold do, but in excess of $500 million in free cash flow that we will put back into the ground. And having that size and that bulk. The other aspect that's really, really important is respect for the technical side. I'm a geological engineer. We drive and strive towards technical excellence in terms of trying to focus on which assets to invest into and, more importantly, which ones not to invest into. So we've had a good track record there, and we've got a strong, high-quality portfolio that is delivering well for us right now.
Excellent. So undeniably, the last 4 years have been a very challenging market, and there's been quite a few CEO departures. So I'd like your opinion on what kind of skill set and attributes you think would make for a good CEO of a mining company.
Well, financial expertise is important, but in reality, the mining industry, you have to have a good handle on the technical aspects of what it costs and how hard it is to actually build and operate a mining company successfully, and the areas that can blow out. And so I've seen a long history of people with more financial backgrounds come into this industry, and after a period of while, they just fall to the side. You have to have that good technical foundation of understanding the real principles of a mining company itself, and I think that's pretty the key attribute that any successful CEO should have in this industry.
All right. You began your career about roughly 20 years ago, assessing projects and project development.
Yeah.
And so I'd like to know some of your basic criteria that you have when you're considering doing a streaming deal.
First off, the 20 years is a compliment. It's been closer to 30 years, so thank you. The criteria for going a streaming deal for us is the margins, the operating margins of the asset that we're investing into. We look for assets that are in the bottom half of the respective cost curve. That means that if it's a copper mine, we look at where that copper mine fits in the copper cost curve. And if it falls in the bottom half, in the first quartile or the second quartile of the copper costs, that's the type of asset that we'll invest into. Because those are the assets that not only will survive through the low part of the commodity commodity price cycle, as we've seen over these last 4 years, but they're the first ones that get invested into by their owners, by their partners, by our operating partners, because they're the ones that deliver the best margins back to them. And that's what we've seen in our core assets, our foundation assets. These assets are continuing to be invested into even today.
All right, I'd like to wrap this up by asking about the demographics and succession planning in the mining industry. We're well aware there's many CEOs that are nearing retirement or at retirement, but there's not too many well-qualified people to replace them. And we're well aware there's not too many young people rushing into this industry. So I'd like to get your opinion for you to address the young viewers watching why working in the mining industry is a great career and why they should consider it.
Well, I'm probably not the right person to comment on that because I've got 5 kids and none of them are going into the mining industry, so I'm obviously not very successful in terms of convincing my own family. No, it's a cyclical industry, and so you have to recognize that there are times when it's tough in terms of commodity prices, but there are also times when it's booming, and I can tell you that the strength, the first thing is that we will always need commodities. The world needs assets, needs resources in order to sustain itself, in order to move forward, in order to improve the standard of living. So there's always going to be a need for this. And you have to understand that with cycles like this, there will be times, the boom times. I've loved my career. I mean, I love this industry. It's something that I'm passionate about in terms of going forward. And all I'd recommend is that if you like travel, if you like exploring, if you like creating value, if you like building from that, this is an excellent career.
All right, folks, we've just heard from Randy Smallwood, the CEO of Silver Wheaton. It has attractive margins. They're growing production to 55 million ounces. And he's given his basic criteria on how he assesses streaming deals and why young professionals should be entering the industry. Thanks for watching. And Randy, thanks for your time.
Thank you, Andrew. Thank you.